Hey, Eric here from 5minuteinvesting.com, and I teach people without financial background how to make 30% from the market using stock options and only 1 hour a day. So welcome to my channel. So today we're going to talk about an interesting topic called mastering the game of chance. And this is really the part 2 of the video that I made earlier called why probability is crucial when investing in the stock market. So if you haven't watched part 1 yet, I would suggest you to go back and watch part 1 first. Okay, so mastering the game of chance. Now earlier in the previous episode, I talked about probability and I showed you this scale. And I asked you, on this scale, where you are sitting right now, entrepreneur, day trader, long-term investor, and depending on who you are, your investing strategy is going to be different. Now, what I forgot to mention is actually a very crucial factor is when you're looking at probability, you can't look at probability alone. You actually need to look at the risk and the reward and how much you can get out of it based on the probability. So if you are familiar with mathematics, it's actually called a weighted average gain and loss formula, where you take the win times the percentage of your win, plus your loss, which is a negative number, times the percentage that you will lose. And that will give you a net number. And if that is a net positive, you're good to go. If that is a net negative, then you need to be fixing your investing strategy, basically. Now, when you are calculating this number, you actually need to include transaction costs. And this is especially important if you are a day trader, because your transaction cost is going to be through the roof, because I know day traders that place thousands of trades each year. And versus long-term investor, you might just choose to invest 5 times a year. Okay, so the most important piece of information in this video is really this slide, and it's the break-even risk and reward. So when you are analyzing probability, you actually need to include risk and reward. So you know when you are break even, because depending on your win ratio, the amount of gain you need or the amount of loss you can possibly have will change. And here I have listed it out for you so then it can be a quick reference. And if you use the formula I previously taught you and you apply it, then you should still get the same answer. And if you think you're 20%, you can actually calculate it yourself. All right. So let's say you're an entrepreneur. The probability of your business venture to be successful is 10%, which is quite optimistic because if you look at some statistics like the number of business registration each year versus the number of businesses closed down in Canada, it's 100%, it's almost the same. So let's say you have 1,000 businesses being opened in Canada, you also have 1,000 businesses closing down each year. So you can think about it as the failure rate being really high. So 10% is pretty optimistic for an entrepreneur. And in that case, you really need a high gain. So in this case, you need a gain of $90 in order for you to break even if what you're investing in is $10. So that's why when you're looking at venture capital, angel investor, they give you very little money. Like they give you a very small amount of money, and that is mainly because the probability of failure is really high. So when you're looking at that as a startup, because your failure rate is high, the gain you need to aim for is also really high. That's why, in the startup community, they always talk about 10x or 100x or something transformational, something disruptive, because you need a very, very high gain in order to justify the potential loss that you might incur. So that's why it looks like this. So if you are developing an investing strategy for entrepreneurs, or somehow you're investing in the markets using this kind of strategy, like you're investing in recently IPO startups, then you need to make sure that you don't take a gain until you are at least 10 times of your original cost. So imagine you're investing in Facebook back in when it first started IPO and it dropped to $19 and now is over 200. So that is like a 10 times gain. So next for day traders. Now for day traders, if you have a win ratio of 55%, then you need to have at least a gain of 45 and a loss 55 in order for you to break even. So depending on how you play with the gain and the loss, which is basically your target profits and your stop loss, then you can create a net positive investing strategy or a trading system. So this is what you need to consider when you're coding or developing investing strategy. So I actually have another video that I recently uploaded that talks about free tools and paid tools. So you can look at that, and I actually recommend one of the tools on how to test your strategy, which is quite important, especially if you are a day trader. So you can play with this percentage, but essentially you need to also consider the gain and the loss, so then you have a net positive system. Now for day trader, it is especially important, I can't emphasize this enough, for you to take into account your transaction costs, because once you have this down and you master this, you are going to be functioning like a casino. You're going to be playing this game that you developed many times, and if during the year you place 3,000 trades and your transaction costs, let's say 1%, then you need to make at least 3,000% in order to have a net positive system. So you can think about it, and why you can understand why day trading is quite difficult. All right. So finally is long-term investor, and that's really who I am. I used to be a day trader. I'm also an entrepreneur. I create multiple startups, and now I'm a long-term investor. So really, I focus on win percentage of 95% or more, and you can watch some of my other videos when I talk about probability. And when you're looking at mutual funds, ETF funds, and so on, their gain year over year is really around 5%. So these are pretty high probability. Like most of the years, you're going to get it. 5%, 7% for the stock markets. That is pretty reasonable. But you're also exposed when there's a financial crash, like a recession. And you probably heard of horror stories that during 2008, people have lost $100,000, 80% of their portfolio is gone, and so on and so forth. And this is really kind of true, because when you're investing in a stock, you're paying the full price and you're gaining around 5 to 7% a year by investing in the index. So you need to be able to control your loss in this case in order to maintain a net positive system. Okay, so this is the new piece of information. And I guess the question is, what is the secret? The secret is, how do you tilt either one of the variables so then you can have a net positive system? And that is the most crucial part of this video, because what you need to do is to figure out a way to tilt one of the variables in your favor, so then you can achieve a net positive system. So now at this point, I just want to ask you a question. What kind of research are you doing before you invest in the market? And you can leave a comment below, and I read every single comment. All right. So how can you tilt one of these variables? Now, let's say for an entrepreneur, and you know that the market size is big. So, and you do your research on market size to make sure that you can 10 times your initial investment. And you try to take as little investment as possible initially, so then you can prove out a lot of hypotheses within your business before you scale. So that's one way to do it, to tilt the odds in your favor. The next thing is, you probably want to do what they call, a minimal viable product, or you do some tests. So then you make sure that the probability of your success is much higher than 10%. So whether you do a customer survey, whether you kind of pre-sell your course, whether you actually pre-sell your product on e-commerce platform, you need to get higher than 10% using this risk and reward ratio. So that's what you need to focus on. Now for day trader, you might need to buy some sort of testing software, so then you can test out your trading system across multiple currencies, across multiple stocks, across multiple industries, to make sure it works over a long period of time. So then you know that you can have a greater gain, like maybe 2 to 1 gain to loss ratio, so then you have a net positive system. Now, for a long-term investor, this really comes down to two parts. And I can speak a lot to this because I have been a long-term investor for the last 4 years, and it is working pretty well for me. So for the last 4 years, 2016 to 2019, I have made over 450% from the stock market. So that's an annual average return of 55%. So in order to tilt this in your favor, it is actually very simple. It all comes down to research. And that's why I'm asking you this question, what kind of research you are doing before you invest in the market. Because the better your research capability is as an individual, as an investor, the higher your win probability is. Remember, in part one of the video, I talked about how Warren Buffett aims for 99% win rate in terms of his investments. Now, once you win, then the next thing is, how can you tilt this in your favor? So in this case, I actually have a risk management strategy where it reduces my risk, and I can multiply my gain using leverage. So this is crucial because once the stock drops past a certain point, I'll actually stop losing money. And that's what risk management system is all about. And if a stock goes up by 5%, I actually have a way to multiply my gain, so then I get 10%. So basically double. So that is really the key takeaway. In this case, you need to combine technical with fundamental analysis, which is your research, with news, ratios, and more to achieve a high probability. So the key takeaway for this lesson is really this number. And most people, when they're investing in the stock market, you're not that confident. You don't know what you're doing. You don't have a strategy. So you have no way to get here. You have no way to get to a point where you're 95% confident that you'll win. And that's really research. If you are not confident in the stocks that you're investing in, it means you didn't do your research. So then that's what you need to work on. And these are the areas where you want to learn in terms of technical analysis, fundamental analysis, news, ratios, and more. So these are the areas you can focus on to achieve a very high probability. So if you are new here, please subscribe to the channel and welcome to this investing channel. So if you want to learn more about how I invest in the markets and get 30% using an hour a week, then you can watch this free webinar called How to Get 30% from the Market. And you can go to the link called 5minuteinvesting.com/free/case/study. And if you are a recurring customer, subscriber, then thank you very much for supporting the channel. Leave a comment below and like this video. And I would like to invite you to take a free course of my coaching program, Investing Accelerator. So in this free course, you will learn how to set up your charts to find stocks at a 20% discount. And you can go to the link 5minuteinvesting.com/free chart course. So that's pretty much it for this video, and I'll see you in the next one.